On one.walmart.com, you can see and enroll in associate stock. You may have to check with personnel to see if you qualify for associate stock. One.walmart.com, you log in, you can click me or you can type in my money. Under my money, you can look at several different options. The even app, get paid early. I love that. I absolutely love it. You can check your pay stub and you can view some items on your pay stub, such as your 401k, retirement, healthcare, pretty much all your deductions on your paycheck. You can check them. The my stock and 401k. You can also look at my discounts to see discounts for Walmart employee, my stock and 401k. Basically, if you want to learn about the stock and the 401k, you can watch different videos to learn different things and ways to prepare. With the 401k and the stocks, there are risks and there are rewards. With the Walmart associate stock, I want you to see the big picture. I want you to see the smaller pictures that build up to a bigger picture. If you plan on just adding a few dollars here and there in the stock, that's cool. But there's a much bigger picture that you need to see. If you do want to start the associate stock and you create an account and you go through a process, you can keep track of your associate stock on your mobile phone anytime. So you can click here and download the mobile app, or you can download the associate stock app in the Google Play or App Store. Check your account and you can sell your shares pretty much anytime you want. Now we're looking at the associate stock purchase plan. This is an overview of the Walmart associate stock purchase plan. And let's see what it says. It says, be an owner, share in Walmart's success. My Walmart stock is one way to share in our success. Success that you help create is also a way to save for your future as part of your overall investment strategy. So you buy stocks automatically. You choose how much and it's deducted from each paycheck. Start or stop anytime. Let's talk stocks. Get a 15% match. Walmart matches 15% of the first $1,800 you contribute. That means basically for every $100 that you put in Walmart stock, Walmart will add $15 more to your $100. So it's almost like covering you 15% in a way. But also when you look at your paycheck, your check stub, you're only really putting in 85 because they're giving you back the 15% back into your earnings. But also you can track your shares easily. This is the easiest time to keep up with your shares with the associate stock app. You can watch your investment online like how I am right now, or you can watch it on the associate stock app. Anywhere you go, you just log into the app, you see how much it is, value of your stock is, and you watch your money grow. You don't even have to watch it every day, but you just have to monitor it, keep it up. If you want to sell, you can sell. When it gets high, you can sell, or you can continue the process and let it keep going. Let's look at the fine print. It says you can invest anywhere from $2 to $1,000 per bi-weekly pay period. Walmart will match 10% of the first $1,800 you contribute, up to a maximum $270 per plan year. The plan year runs from April through March of each. So basically from April to March. You can sell your stock whenever you choose from the computer share website or the associate stock app. Associates who are 18 years or older can participate. 19 in Alabama and Nebraska, 21 in Puerto Rico. For the new people, it will click get started investing. When can I get started? You can start anytime you're ready. The plan is free to join for all Walmart associates that are at least 18 of age, and basically what I just said about 19 in Alabama, Nebraska, Wyoming, 21 in Puerto Rico. And unlike investing through a brokerage house, there are no fees or commissions when you buy Walmart stocks. When you buy Walmart shares through the ESPP, there are, however, fees involved when you sell shares or leave the company. This is a breakdown of what you're going to get. It says Walmart will match 15% of the first $1,800 you contribute through payroll deductions, up to $270 per plan year. You can keep contributing after you've received the maximum company match. You just won't receive additional matching contributions until the next plan year begins. These are some examples of how bi-weekly contributions add up to stock purchases. If you contribute $10 bi-weekly, your plan year payroll deduction would be $260. Walmart's matching contribution would be $39. The total amount used to purchase stock is $299. If you contribute $20 bi-weekly, your plan year payroll deduction would be $520. Walmart's matching contribution of $78, and the total amount used to purchase stock would be $598. If you contribute $70, your plan and your payroll deduction will be $1,820. Walmart's matching contribution will be $270, and the total amount used to purchase stock will be $2,090. Also, there are dividends that are paid out. Now, these are smaller amounts, but they do also add to the process, and they will show you on the app. They will show you upcoming dividend payouts and the pay rates. They will be automatically reinvested in more Walmart stock. This is just the starting point of something that can be special if you do it the proper way. So basically, this shows you that you can control the amount that you put in there. You can choose $10, $20, $70, $100, $2, $500, $600, $1,000. I'm looking at an employee stock purchase plan benefit calculator, and it's on mywealthtrades.com. There are other ones, but we're trying this one out so you can see the bigger picture. There are many different pictures that you must look at in the associate stock. So let's say that the lowest stock price during a 6-month period was $121, and this is only for a 6-month period, so this is not for an entire year. The numbers will be larger for an entire year, but also you have to remember that the associate stock stops at 1,800, the 15%. So this calculator is good for 6 months, because that would be 18 bi-weekly payments. That's when they would probably stop if you add 100 in there bi-weekly. So after that 18th week, but this is only 6 months, so we should be good. The lowest price is 121. The discount is 15%. The stock price at the end, let's just say it was 131. It's currently 131, and your dollar contribution per paycheck, your bi-weekly contributions per paycheck, let's just say you did 100. So after 6 months, you will have $1,528 in your ESPP account after contributing $1,200. This gives you a total return of 27.4% and an annualized return of 163.2. Now, the annualized number might be off because we're only doing the 6 months, and the 15% is only for the first 1,800. It would stop after that. But for a 6-month window, you have the opportunity to gain some extra cash in your associate stock. You also have to look at it from the stock market standpoint. Walmart stock is currently consistent. It's good. This is a good time to invest, or you can choose to wait. You can choose to wait and see if it goes down, or you can just choose to invest now. And with the 15% discount, it makes it much easier for us to buy the stock. All we have to do is just monitor the stock from time to time and just go to work, do our job, and focus on other things. And also, if we ever needed to get the money out of the stock, we can. There may be fees, but when you're selling a stock, it's not that much. Okay, when you buy stock with the associate stock plan, does not charge fees to purchase stock. However, when you sell your stock, there is currently a $25.50 fee for each transaction, plus 5 cents per share of stock hold. Basically, it's probably in your best interest to put as much as you can, because let's say you just keep putting $100, $100, $100, $100, $100. By you constantly putting $100 in there, 15% discount would pretty much wipe out this fee. The 15% discount would pretty much take care of $25 fee. I mean, you're still going to get the $25 fee plus 5 cents per share. If you had 20 shares, that'll be $1 extra, but that'll be about $2,000 something. And so I think this fee is reasonable, and this fee by itself always makes me want to just put more to make sure that whenever I need to take it out, the 15% discount would already balance that part out to where the fee is nothing much to really stress about. And you invest for the long term, these fees should not greatly impact your investment. So if you're in it for the long haul, that's what I'm trying to do. But if you sell shares many times throughout the year, they can eat into your returns. And because you will not receive a bill for your fees, they are taken directly from the account before you receive the proceeds of the sale of the stock. You may not be aware of that impact. You work hard for your money and deserve to make the most of your investment opportunities. So consider your plans and these fees before you invest. A lot of people, they try to buy the stocks and they try to get the $15 discount 1, 2, 3, 4 times and then pull the money out. But they're not looking at the bigger picture. They're not seeing the smaller pictures. You have to play the long game. It's in your best interest to play the long game and try your best to keep the money in for a year or more than a year, and then if you need to take it out, take it out. Let's look at something called a capital gains tax calculator. Okay, so when you buy stock under an employee stock purchase plan, the income isn't taxable at the time you buy it. You'll recognize the income and pay tax on it when you sell the stock. when you sell the stock, the income can be either ordinary or capital gain. If you pull out your shares early, there might be a capital gain tax. So let's just say the initial value of your stock, okay, let's just say initial value $100. You sold your stock $1,000. You sold your stock at $1,000 and it was less than a year. Also, the location may affect the capital gains tax for the different states and rules and regulations. Your annual income, your filing status may also affect, and your filing status may also affect your capital gains. But so if you're single, oh dear, $1,000 sale value, the length of ownership was 1 year. Let's see, what if you kept it for a year? It'll go all the way down to $36 during tax times. So you would only pay $36. There are other ways to lower those numbers a bit more. You just contribute to your 401k or IRA, and that could reduce your capital gains tax. And it's also a great way to prepare for retirement as well. Let's just say did 100. Let's just say you put 100 in there and something happened in your life and you needed to pull it out. You got the $300. You probably had to pay a fee of $25.50 plus I would say 15 cents, but it might be like 13 cents because it's 5 cents per share, and the shares will be like 131 right now. It would be less than 15 extra cents plus the 25.50, and that would give you a number in the 200s. You would pay that, but then when tax time came, you would have to deal with a total capital gains tax. You will pay of $32. If you get a large tax return, then that really won't affect you. If you get about $500, still not that much. Put about $5,000 in there, put it in for less than a year, the total capital gains tax might be $784 if you're single. If you're married, it would be $588 for me, single. But what if you kept it in there for more than a year? And so if you keep it in there for more than a year, your total capital gains tax would only have to pay $196. And if I made these contributions, it's just not necessary. Seems like the IRA is the way to go to. So if I made contributions to my 401k and IRA, that would also help reduce it. It's all a strategy and plan to try to reduce the capital gains tax. You can play with this capital gains tax calculator. If you're still here, let's look at some stuff. Look at my stock purchase plan. Okay, so we're currently looking on the ComputerShare website at my associate stock portfolio, and on the ComputerShare website you can see the breakdown of your stock, and also can click here to sell your shares. You can keep track of your shares on the phone as well. Click details. So the number of shares currently 1.87. Let's see, the dividend shares $1. That's when they reinvested the money. The market value of this one is current one $2.47 and 95. Price per share beginning balance $118.94. Market value $142. Shares held 1.1. Ending balance. Well, let's look at specific dates from May to a random date in the future. And so our purchase beginning balance was $56.70. The current balance is $248.46. The payroll deductions, 3 payroll deductions, $50 each, $150, and the dividends reinvested $93. The benefits provided by Walmart contributions, number of transactions 3, shares added, amount invested $22.50 from Walmart. And so basically $150 into $248, and that was in a major period of time. It might be good to put more, but you want to set your amount to a level where you can maintain it all the way through. Now we're going to look at my stock. Click online enrollment. You can do an annual enrollment when it's time. You can do an HSA checkup. You can do a family status change. Okay, so we're going to do the associate stock purchase plan. Going to make an adjustment. Okay, so these are the basic amounts that are invested in the stock 401k. They don't show the Roth 401k, so I guess the total number isn't going to be up there, but you should also invest in a Roth 401k. You can go to benefits.ml.com and do that one, but they are doing the associate stock right now. So you want to make an adjustment, you just click edit, participating, not participating. If you decide not to participate in the associate stock for a paycheck, something's going on in your life, you can just click not participating. It's that simple. Or if you want to participate in it, click participate, choose the amount. If something's going on in your life, need to lower it down, you can do 25. I'm trying to get the 15% from the 100. You get 15% from 50, 15% from 25. it's 15%. Whatever number you put in, you put $2 in there and it'll give you 15% of that. So I'm liking where the stocks are right now. I'm gonna make my own decision because this is my decision, my life, and we'll just see what happens. I don't know how I feel in electricity. I feel good about where Walmart is headed, and gonna try to stay consistent on the path of trying to do the right things and trying to save for the future. I feel the 401k is the planning for the future of when I get older, and I see the stocks of planning for the future, I would say 1 year from now or so. This is my 1 year future plan. I'm also might be adjusting the 401k hopefully over time, but this is my decision, and I'm going to try to stick with it as long as I can. If something happens in my life to where I have to go back down or even not participating, then that is what it's going to be. A lot of people are stressing about putting money in there, but I mean, even $2, you can put $2 in there. I know it's not much, but it's something. And so you put up to $1,000. I mean, if this was like your second job and you just had a lot of extra money, then this would be great for you. So we're going to put on 100, click OK, and all you have to do is click I accept these changes, and that's pretty much it. So keep investing, keep saving, and planning for the future. The future is so close, yet it seems so far. Planning can be an important part of financial success, but also you must take action. Sometimes if you expect things to get better, you have to take action, and positive actions and reinforcements can alter your destiny. Always think about the future. Always think about putting yourself in a better financial situation so that you can be stable and live a better life. And that's what it's all about. It's all about trying to do the right thing for your future. You are your own person, and your future is very important. And you're with Walmart, so even though you are your own person, you're not alone. There are many of us on this ride, this journey, and let's just make the best of this awesome situation, this awesome opportunity. Good luck, keep investing, and see you in the future.